Good day, everyone. Ali Safi here, Friday, March 7, 2025, weekly wrap. Before getting into daily analysis, or I should say weekly wrap today, we're going to just go through first to the SPY volume. So today, SPY volume traded 76 million, which is above average. And I would say this week actually was pretty high volume week, I should say, especially on March 4, which is going to be Tuesday, market just traded 109 million SPY, which is a great number. And I believe this is kind of like a shakeout for the next rally. I would say market is pretty close to its bottom. If it's not bottom, I'm going to just run through some analysis today, and you will see that why I'm emphasizing this is a correction, not a crash, nothing more. So this is going to be tradable rally. And 76 million today, 80 million yesterday, and 71 million on Wednesday. This means market is trading above average. When you see the previous days, 26, 31, 36, 50, 58, 43. So the average volume for SPY is 50 million. When we are getting above average, this means the higher volatility and institutions are getting involved, especially on Tuesday. Market traded 109 million. Fear and greed index, the 20, still we are in extreme fear. So that's very, very important. And right now we are at extreme fear. Usually when we are at extreme fear market, usually close to the bottom. Here is AAII sentiment survey, which coming every Wednesday. And based on Wednesday, 57% still people are bearish. Last week, if you remember, it was 60% bearish. And when we are getting to this number, I would say you should be very, very greedy because this is insane. We got this number in 2022 at the bottom of the market. In October, September, I believe we got this. And right now we got this within 10% corrective move in S&P 500. This is a lot. And today we just get into 7% and getting all the way down to 9% correction, which is fantastic just because we are in a corrective territory, not a crash one. All right, let's go to market. Market just miraculously touched 56.65 today. Yesterday I was saying about 56.67. Wow, what a number. So this number is not magical number. If you know the chart, if you can just know about the breaking through and also the previous pivots that we had, and this is the white range bar we got above this, and here is the consolidation above this level. So you can understand 56.60 to 56.67 is the area that institutions push this market higher to new all-time high. And this zone never traded, never traded. Right now, this is very, very fresh one. We got it, fresh zone, fantastic move. It doesn't mean that market is bottom, but I would say this is decisive bottom. At least we are getting a nice rally to the upside. I remember I was talking about the trade rally here, but market fell yesterday and today we just got into 56.67. We should say we are adjustable. We are flexible. We have to be flexible. Otherwise, market is going to kill us. So you need to always have plan B. If your analysis goes wrong, you should have a stop loss if you're a trader, or you should just dollar cost average, just because this area is going to be very, very important level for market. Today, we just got into this level. We get back to the upside. If you go to weekly chart, so we got here to this area. If you remember last week, we were saying about this level, and right now we just got a bounce. Still, based on weekly chart, we may see more downsides coming down to 5,500, but 5,500 is going to be a lot of support here, especially within this white range bar. So let's say if we get more downsides, 5,500 is going to be the next. 55.15 especially is going to be the good level to catch. And we are still within this bullish trend line. So if we just zoom back here, you'll see that. Here is the COVID crash. Here's the bottom in 2022, 2023 October bottom. And this is the trend line that we're going all the way up. So this is kind of like a 5 years trend that we are within this bull market. And every single time when we got it here, it's valid. So it's just the market had a nice reaction to the upside and get back to the upside. I'm not sure if we get all the way down to 55 to even 5400 down here, because even if we are in a bear market, let's say we are in a bear market, that's the worst case scenario. And this is just the beginning of the bear market. Market is not going to go down in a straight line. It happened in COVID crash. You know, the sentiment was very super, I would say super bearish because everything was super bearish. The hope for the future was bearish, basically. So this is the straight line. And you see what was the reaction after that. Even in a straight line down, market is rubber band, just going all the way back up to new all-time high next 2 years. So even if we are, let's say, even if we are in a bear market, even if market goes down here, we're gonna see a nice snap back to the upside, potentially to even 5,800. So it always gives you opportunity to run away. And then after that, we will see kind of like a wave down, then wave up, wave down, potentially to 4,100. I'm not foreseeing this scenario happening this year. Maybe in next 2 years, we will get to the bear market. But this year, right now, based on the chart, we should say this is just a corrective move, 2 weeks correction, nothing happening. The only thing that I'm not convinced yet, fully convinced if we hit the bottom, is a stochastic momentum on a weekly basis. We don't get into bull reversal. So we just got a bear reversal last week, and we are going down. The last previous bounce, actually, we went all the way down to here, to middle of this stochastic momentum, and market bounced back up nicely. So this is the last time, October 2023, when we got into this oversold condition, bull reversal, and look what happened after that. So this is the perfect scenario that I'm looking at. Right now, it doesn't mean that we need to go all the way down here for a stochastic momentum is getting to the bull reversal, oversold condition, and then getting back to the upside to see another rally. We may see something like this, but the only reason that I'm not saying we may see some kind of like more choppiness down the road or kind of like a volatility just because we are kind of like in middle of no man's land right now. Market needs to hold 56.76. If it doesn't hold, we can go all the way down to 55.15, even 5400, even 52.71. That's going to be the lots of support here. I know it's going to be the breaking of the structure, but it's not going to be end of the world. Lots of time we got below this trend line, like here is October 2023. We got below this trend line, going to snap back up sharply, and sure, we are at new all-time high. After that, look what happened, new all-time high. So it's trend line is not everything. I know it's going to be good indicator. Some people are just panicking when it goes below trend line. As long as the structure is not shifting to the downside, we should just give market benefit of doubt for the next rally to the upside. Right now, 56.76 is the area that market hold up very nicely today, especially today's price action is kind of like a hopeful for me, at least for the next tradable rally. However, based on the time that I have is March 17 to March 25, you should see stock market bottom. You know what happened over there. It's going to be first day of a spring, so it's going to be March 19, 20th, and that's going to be a very, very important level. The moment of equinox always is going to be reversal moment for the market. Moving on to daily chart. Let me just go to the daily chart before Nasdaq. Here's the daily charts. Daily chart, we just got a nice dragonfly doji. We are kind of like a forming choppy and zigzag. We close above 200 moving average on a daily basis, which is bullish. And based on the price action today, I believe at least we are forming a nice bottom for a tradable rally. Again, 6,000 area, 6,059 is going to be very, very important level for the market for the next rally. But I would say still we have some times to get there and see how a market is going to react to that level. So we'll see how it goes. Moving on to Nasdaq. Nasdaq, let me go to weekly chart first. Here's the weekly chart for Nasdaq. We got into this trend line here. So Nasdaq beautifully reacted to this trend line here. So this is the third touch, and this is the fourth one. Today, we just got the fourth one, and nicely back up. So if we got a bull reversal on Nasdaq, potentially on Friday next week, which is going to be weekly close next week, then we can see potentially market is just heading for another rally to 22,000 area. However, 21,112 is going to be a massive resistance there, so we need to see if Nasdaq goes above it or still lagging behind that. But right now, I would say Nasdaq nicely reacted to this trend line. Everything is going perfectly, so we'll see how it goes. Moving on to the daily chart. Daily chart tells the same thing here. We got into this trend line here, nice dragonfly doji, got into this demand area. Look at this box here. So this is my green box that I show here in previous videos as well. So we need to see if rally goes all the way up to 21,200 to 21,300, 400. Then if it goes back down, that would be kind of like the bearish scenario. We are going to see potentially W pattern or even lower low with the divergence, or even getting back to the bear market. I don't know. But right now we are not speculating something. We're gonna see market is gonna rally potentially to this area. So after that, we're gonna see how market is gonna react. Slap back down, forming a W pattern going up, or kind of like a consolidation and then getting back to the upside. So we will see how it goes. Right now, we will give market benefit of doubt for the next rally. Moving on to US 30, which is Dow. Dow just nicely getting back to the upside today. Still above this January low, which is positive. Market didn't go all the way down to November pivot for Dow. So Dow is forming better, actually, positive candle here. So we should just give Dow benefit of doubt for being the next leader right now. We are seeing higher low here. So it's not that bad at all. So I know it's below this trend line, but we can recapture its trend line, just forming a consolidation, a bull flag for a next rally to the upside. So we'll see how it goes. Moving on to let me go to gold here. Gold just forming a doji bar here, another doji bar, forming a bullish consolidation, and weekly positive candle, not a bad shape at all. So if we see some kind of like a drop in gold, potentially 27.85, we should just see the correction is over ABC pattern, but I don't think that's gonna be the pattern. We may see some kind of like a bullish consolidation for the next rally to the upside for gold 3000 area. Silver, the same price action here. We are forming a very nice bullish consolidation here. I don't see any negative point on the chart. We just got a QM pattern, but this QM pattern got into 3250 and forming a nice bullish consolidation. All in all, I should say, if silver take out this high, we can go all the way up to $34. We will see how it goes. Moving on to crude. Crude is bounced back up today, but rejected sharply after 68, close 67. Still, crude, I don't give any kind of like a speculative approach for crude, just because this is bearish right now. And obviously, if we don't get above 74, I would say there are lots of rooms up there. So 70 to 72, 74 even is going to be a huge resistance there. If it doesn't go higher, we're going to see crude is getting back to 51 to 53. So we'll see how it goes. Moving on to individual names, starting with Bitcoin. Bitcoin just sharp sell off today. 85,000 right now. I would say during weekend, if Bitcoin goes below this 81,000, the next drop is coming here 64 to 76,000 area. That's gonna be the area that I'm kind of like getting into Bitcoin for a next rally. Right now, I don't think Bitcoin is telling us a nice setup. I know there are three higher lows here, but if it goes, as I said, below 80,000, that would be kind of like a bearish signal for Bitcoin. Ethereum is the same, going down. Actually, it's kind of like a more obvious that Ethereum doesn't show any kind of like a bullish price action. Right now, it's just struggling to hold above 2000. Moving on to the bond yield. Bond yield is forming kind of like a nice higher low here. The formation is bullish, at least for a tradable rally. Potentially, bond yield is going to get back to the upside to 4.20%. So that would be kind of like a nice sell. But this dead cat bounce can put pressure on Treasury, which just happened today. So Treasury gapped up, going down. So this means Treasury still can go lower. I would say 88 to 89 could be a possible scenario for Treasury, which is going to be bullish for stocks. VIX just got into $26, getting back to the downside 23, close above 20, which is still not a good sign for a stock market because this tells us the fear is here. Yeah, we saw the sentiment. Still, we are at extreme fear. But if a stock market goes back up nicely next week, especially Monday, Tuesday, then we can see VIX is gonna descending to the downside, potentially 18 to $16 for the index. Dixie is down today as well, but got into this important level, 103, 104. So we may see some kind of like a bounce to 105, but after that, I'm not bullish in Dixie. Overall, I would say dollar is gonna get weaker and weaker, and potentially we're gonna see 100 level for Dixie sooner or later. We're gonna see that. Moving on to technology name, Apple just getting back to the upside nicely. As long as we are above 228, we should just give market or Apple benefit of doubt. We need to get above 250 if we want to see a very fully bullish structure for Apple. Right now, it's just a 240. We will see a choppiness in Apple. Hold up very well during this downtrend. Actually, Apple goes very well. Amazon today, we just got the Dragonfly Doji nicely reacting to this level, $190 and getting back to the upside, 199.20 right now. So Amazon below 200, I would say, is kind of like attractive for lots of value investors. Moving on to Meta Dragonfly Doji, I would say this is bullish. I know the structure is forming to the downside, but as long as we are above 582, we should just give Meta benefit of doubt. We need to see a confirmation for a next rally to the upside. Microsoft, this one is better. Why? Because we don't get lower low. We got higher low today at a very, very important level. So 380 to 384, that's the area that Microsoft touched on Tuesday, got back up nicely. We just got a higher low today and getting back up again. So this is kind of like a bullish for Microsoft. We need to go above 420 for getting all the way up to 448. Google, the same pattern here. We just got a nice rally. So Google on Tuesday, we got the bottom. So we see the divergence in different names. Some names actually on Friday, on Tuesday, when market just traded a lot, 109 million for SPY. Some stocks actually bottom on that day. So this means the divergence here, potentially today, we got the final low for lots of names. So we'll see how it goes. Moving on to Netflix, the same pattern here, just got into this demand area, bounced back up today nicely. Tesla, hopefully this is the bottom. We need to get above 300, then 360 to give Tesla fully bullish momentum, because if it goes above 360, I would say 520 is coming down the road. So Tesla is going to be spiky. It's going to be like VIX. If it goes up, it's going to go very fast. If it's going to go down, it's going to go down very fast as well. So Tesla, I would say this is the level that we need to see a nice tradable rally, at least to 360 for Tesla is coming down the road. Moving on to SMH, which is semiconductor index, hold up very well today at this important pivotal point. SOX, the same pattern here. We just bounced back up nicely on this candle here. This is very, very nice candle, form up very well. August 2024, when we got this capitulation, find the bottom here. And the real scenario is this is the bottom here. This is a weekly demand area, 178 to 190. So this is a very big range. Lots of institutions got involved. Whenever we get close to this level, market is going to bounce back up nicely as well. But we need to get above this 240. I would say even more high. Yeah, 240 is fine. 240 to get back to its bullish momentum. Moving on to Taiwan Semiconductor Index. This one is going lower here, 177. So nice W pattern here. Moving on to AMD, just forming higher as well today. Good positive price action for AMD, 100, close above 131. Above 100 on a weekly basis, which is bullish. 90 to 97 is a weekly demand area. NVIDIA just got into 107.78, which is very, very important level for NVIDIA, just because 98 to 108 is a demand area and formed a nice hammer today. Not a bad price action for NVIDIA. Texas Instrument nicely touched this trend line, got back up today. Good price action for Texas. I would say this is very, very important for Texas. Lamb Research just got back above 78. I would say Lamb potentially formed a bottom here for the next rally to the upside. XLF, which is financials, got into this demand area. We need to get to this gap or even higher. But all in all, I should say lots of names got very, very decisive candle today. And potentially we are bottom for a nice tradable rally. KRE, the same pattern, Dragonfly Doji, great move for KRE. JP Morgan, not a strong candle, but got into important area 240. Goldman Sachs, nice rejection on 550. Right now, 560 actually is trading after hours. So Goldman is got into important level. Bank of America goes all the way to this gap here, $40, and got back up nicely. Wells Fargo, look at the candle here, goes to this gap window and then bounce back up sharply. So I would say Wells Fargo can go to this gap 75. That's going to be a potential scenario. Gold miners, GDX, just got above a $40, which is pretty nice. I would say this sector can outperform the rest, especially next few weeks and months. GDXJ, the same pattern, going higher, $51. And AEM forming a very nice now, this bullish consolidation trigger to the upside confirmed right now. So $98, pretty close to new all-time high. Newmont rejected, but I would say be patient with this. This is laggard. If you have a shareholder or if you are a shareholder on Newmont, so you need to be patient, but I would say $50 is going to be the scenario for the next few weeks. Gold Barrick, so just got back up today. Steel sellers took position on $19. If we get above this pivotal point, I would say $21 is coming down the road. XLE, Energy Spider just got back up today sharply. I know crude is kind of like a decisive moment, but these sectors, or stocks, I should say, they're very, very important. They're kind of like a leading the crude. So crude goes to lower low, but XLE didn't go to lower low. It just showed a higher low here. So we need to see XLE goes back up above above $92. Exxon, the same pattern here, just jump up nicely today. And Chevron goes higher as well, $156. Fantastic move for Chevron. So we will see how it goes. But all in all, I should say these sector is holding up very well, especially when market is down. Chevron and Exxon, they're kind of like beat it before, and right now in this downside, they went choppy. So we'll see how it goes. All right, folks, I believe I covered everything. If you like this video, please smash the like button, subscribe to our channel, and have a good one. See you on the chart. Bye-bye.